Welcome back to Focus Fridays, where we open up the playbook on real estate investing, covering everything from core fundamentals to the sophisticated strategies that help our investors grow wealth with confidence. I'm Jared Shum, head of investor relations here at Focus Capital.
I'm Chad Sheeler, founder of Focus Capital.
Chad, today's topic is especially important for passive investors. We talked about active and passive in our last episode, but how do you actually evaluate a real estate sponsor or operator before investing? Because at the end of the day, you're not just investing in the deal, you're investing in the people, you're investing in the person behind that. And so let's start with the big picture. Why does an operator matter so much, and especially in passive deals? And then kind of within that description, what is an operator? When I say operator, we know what we're talking about. What does operator mean?
Yeah, I think zooming out, operator is the sponsor or the company, the group, right, that's going to be in charge of finding the asset to go acquire, to managing the process to acquire it, the closing process, and operating it from data acquisition until they sell it someday. Like, who is doing all that work? Because you can't just go buy a property and give it to a PM company and be hands off. There's something required, whether it's review the financials or selecting tenants or managing work orders or maintenance or CapEx. There's something, right? So the operator is a person who's actually doing the work over that period of time, and hopefully they're doing a really good job. Because in real estate, you can buy any properties, pay the highest price.
Yeah.
What matters is how you actually the business plan, how you operate it. And operations are even so important nowadays, with it being a tougher market than it was 5 to 6 years ago. You have to really have those dialed in well to operate well and give your investors returns.
That sounds like it's probably your most important decision when you're becoming a passive investor.
It's the hardest part and the most important part.
Great.
Great.
High risk, high impact.
Yeah.
So if someone is reviewing a deal for the first time, what should they focus on first? Obviously, there's many things, but you just said like evaluating an operator is the biggest and most important decision. But when they're evaluating a deal that maybe they trust an operator, but they're evaluating certain deals that they're coming across, what is the first thing that they should focus on?
Yeah, we've already determined that operator, I feel like, is more important than the deal itself. I think it's operator first.
Okay.
Because you could take a great deal and put it with operator A or operator B, and one of the two can make it run really well, and one could drive it in the ground. So the deal itself doesn't make it a perfect investment. Now the deal matters, right? Location, the market, the price you're paying for it, the business plan, but the operator is what really is the magic sauce here. It really is. So I feel like look at operators. 3 most important parts here that I would say look at operators for would be, one is like, what's their proximity to that market, or what's their experience already in that market or region? Number 1. Because markets are always different.
Yep.
Number 2 is, what's their skin in the game? Are they putting their own money in this deal alongside using LP? The last episode we discussed it last week, right? And then 3 would be, what's their track record? What's been their experience so far on exited deals? Have they exited them successfully? Have they had capital calls? Do they have great returns? Have they done it before at all? Is their first time in this market, first investment ever? Like, what's their experience?
Yeah.
If you're gonna trust an operator with your hard-earned money, make sure they at least have 3 of those things.
Yeah. So it sounds like consistency and honesty from a transparent perspective matter just as much as headline numbers then when it comes to evaluating an operator.
Yeah, and we didn't get to that actually. Transparency and communication is a huge part of an operator you should be looking for. Okay. And the way to find that out is by asking them, maybe, what's your past investor reports, maybe past investors to speak with, do you have referrals? You get an idea there of their cadence for communication with their investors.
We haven't been around for 10, 20 years. So when evaluating an operator, is experience enough alone? And how much weight should an LP put on the amount of time that a fund or a firm or an individual operator or sponsor has been around and how many deals they've gone through? Because there's got to be a point where it's like, it doesn't matter if you've done 5 deals or 50 deals. So the person that's operating, their 6th deal could be a better operator than the person or a firm that's operating their 51st deal.
And that's a great point, because sometimes it's what does the operator have to lose if it does not go well? So if I was an LP, I'd look at this. All right, if this person is on their 5th or 6th deal, they've had a couple full cycle or none full cycle, and he's going to put up 25% of the capital needed, a fourth of the capital. Maybe it's several $100,000 or $1 million. Like, okay, he has serious skin in the game here, and he's going to personally guarantee the debt. If something goes wrong, he loses his house and his retirement, right?
Yeah.
So that I'd probably put money to that guy.
Yeah.
because he's going to make sure it goes well.
Hmm.
By the same token, that newer company, they have a lot more writing on their sixth deal to go well than their 56th deal,
Mm.
right? So there's more to lose there.
Yeah.
So how much harder will that newer person work to make sure it goes well
Hmm.
versus somebody who could afford to have one loss out of 56 losses or
Yeah.
wins? Sorry.
But I guess my other question is on the same side is like obviously we're at 11 deals, 4 full cycles, 7 active right now. Obviously, we're gonna get to the point that we're at our 56 deal. How is that gonna be like? Are we gonna become those people? Obviously, you and I won't. But like, it's like, how do we make sure that we stay out of that bucket of like, we don't have anything to risk on this 56 deal? So when evaluating that, I feel like there is some certain level of importance of like they've continued to attract investors. They're on their 56 deal, and so where is that equilibrium of like their sixth deal and their 56th deal? They could both be good operators. How do I decide between the two?
It comes down to who do you know? Is the operator you're going to invest with somebody you already know and they're the newer one? If I would probably pick that over somebody I don't know at all, that's a larger operator.
Yeah.
Or maybe the deal itself is in your home market, in your backyard. Maybe you like that deal. Not every operator can find the same deal. They only one's going to buy it.
Yeah.
Right. Maybe you wanted to be on a deal in Fishers, Indiana, new development project. Well, we had that one. Nobody else had that one.
Yeah.
And you like that property location. You have a passion for that area. That'd be a reason to probably choose that newer operator, for example.
Yeah. Let's go back to when we were talking about communication and transparency. Like, how important is that? I mean, I can speak to it a little bit, given that I came from the world of being an LP. You came from the world of passive investing. I think that is a unique lens that we have here, you and I individually at Focus Capital, is that we've been on the other side. I've been the person that has interacted with an IR rep or the head of IR, and I've had people that, no news is good news. I've also had people where it's like nothing wrong happened with my capital, but I also didn't know what was going on with my
Yeah,
capital.
left the dark.
Yeah. And so, like, where is that equilibrium point of like, okay, I'm hearing from Chad too much, I'm hearing from Jared too much, or I know exactly what's happening with my property. I know exactly who to talk to if I want to double tap into any of these bullets. Like, what does that cadence look like for a good operator?
That's a great question because I've always been in the mindset to over communicate, and that can't be a negative thing. However, I'm not sure if we had some investors who have not wanted the over communication. They haven't told us that.
Yeah.
I've never been said, Chad, you're reporting too much. Lay off of here. Every month is too much here. Now, if it's every week, it might be a different story.
Yeah.
But I developed that standard for us based on what investors told me about other operators they invested with. And they told me like, oh, I'd hear from them once a year. Or I'd hear from them when there's already bad news and it's like past the point of no return. Or I'd hear from them once every 6 months with no financials. I just was left in the dark. I had no idea what's going on. And they're like, just tell us what's going on, good or bad, be transparent and do it often and regularly.
Yeah.
So when I realized the bar was set very low for that, I felt like that's one thing we can do with our time that won't cost us anything else except for time here. We can do the best job of reporting and communicating with our investors to earn their trust and credibility.
Yeah.
So that's monthly is our thing at Focus Capital.
Yeah. A step deeper on a lot of these points is like there are a lot of operators that are probably could rival or are as good as us, but they don't communicate with their investors, and not because they have anything to hide, but maybe that's just not something that they emphasize or not something that they prioritize internally with their operations. And so here, like you had mentioned, we have two methods of communication that is on a schedule. All of our investors get a monthly update, and that is a shorter, more digestible, bullet-pointed email that has KPI at the top, typically occupancy, what's happened in the past 30 days and what is planned for the next 30 days per property they're invested in. And then our quarterly reports are way more robust. They have attachments, they have full financial reporting, and they don't have to click into that, but they can. It usually includes a video from either you or I, or both of us at the same time. And we talk about everything. We talk about headwinds and tailwinds because we want to make sure that there are no surprises. So if a problem is building up or if there is an obstacle that we're overcoming, we're already pointing that out and then sharing the solutions that we're going to have on that. And then that quarterly report, similar email, still comes in a digestible format, but there's more for them to click into if they would like to.
Yeah.
And I think that is the cadence that we have found works best for our investors. And then we have certain investors that want to talk to me or want to talk to you, on a weekly or monthly basis, and that's totally fine. And there's some that are like, your monthly and quarterly updates are enough. I will reach out to you if I need anything else. And so I think it's important, for people listening that are thinking about starting their own firm or syndication and maybe are not on the investing side, of like recognizing that investor segmentation is important.
Yep.
Knowing what they want and listening to what they want and executing on what they want is more important than what you think is best
Yeah.
for your investor base, especially when you're a younger company just starting out.
Yeah, I agree with that 100%, man. I think, and also getting that pull from investors, like you said, about what they actually want and then delivering that to them. I think we're at the point now to where we're getting more feedback
Yeah.
on the reporting. We're learning what they actually want, what they don't want. And we've got some new tips we've implemented into the reports going forward to where we're tweaking things as we go. And it'll keep reiterating as time goes on.
And I think that's a testament to the type of relationship that you and I have built with our investor base. Is like they can tell us when they don't like something. They don't have to wait and be like, it's okay, but it's not worth my time to try to, have them reiterate this process. We have certain investors that need their reports in a certain way, just from an accessibility perspective. We have certain investors that, that don't even read that part and just, are like, if you want my money, it's fine. I trust you. As long as as long as I'm getting checks in the mail, I don't even read the reports. And so
Yeah.
we have everything from someone that wants to be ran through everything to, I don't want any communication. You can feel free to email me, but I'll call you if I need to call you. So we've seen the whole gamut, even
Yep.
with
Wide range.
yeah, wide range, even with our growing investor base. And I would still say that we're pretty early on for where we have goals for the next 5 to 10 years. Flipping it on the other side, if an investor gets a chance to speak with a sponsor, what questions should they ask?
It's a great one. They should ask, obviously, what's your money in this deal? Like, how much are you putting this deal yourself? Track record. What's your experience? What's your business plan? What are the risks involved? Like, tell me what could go wrong here.
Yeah.
That's a great question I get once in a while. Tax benefits, of course, ask about that. Ask about what's maybe some challenges they faced in the past on previous deals and how'd you overcome that? What's something you'd ask an operator?
I think the two things that I would ask if someone was asking for my money is one like that. It's like, tell me about a mistake or a learning experience, or tell me about one of your properties that didn't go to plan and how did you pivot? Because the thing with any type of investment is it's not risk free. But if I know that an operator is doing their best to mitigate those risks and are already aware of all potential risk, that gives me a little bit more security, at least from an emotional perspective, from a decision making perspective, than if someone's like, we're perfect, we've never faced any headwinds. Because there's the chance if they've only done 2 deals and they just went really well, you haven't faced headwinds.
Yeah, if you haven't faced them yet, you've not been in this game long enough.
Yeah, it's like a relationship.
have.
If you've never fought, how do you know that you truly know how to communicate and problem solve? And so it's like there is a very good chance that smaller, younger firms have done 1 to 3 deals and not faced any headwinds and been able to do all those things. And so they think that that's just how it goes. And so one of the benefits of making early on mistakes, both as an individual before you started Focus Capital, and then even some of our properties that you've talked about that, distributions were coming out a little bit later than we had projected, is we have that experience of what to do when things aren't going, up here. Even though we shoot for up here, we underwrite and we're conservative for here, and we know how to operate here and get out of that area.
Yeah.
IRR gets a lot of attention. Just as a phrase, as a number. But how should investors look at past results more holistically than just IRR?
IRR is a number, like you said, that a lot of investors look at to analyze a deal when that's probably the last thing you should be looking at on a deal by deal basis. Because you have 2 different deals. Both are, let's call it a 15% IRR. There's a lot of different paths to get there and how they could have got that assumption. The assumptions were made to get the IRR to be derived. It could things like maybe your hold period, shorter hold period, higher IRR typically. Maybe your exit sales price or exit cap rate can influence that. Your rent growth factor year over year, your vacancy factor. Little tweaks you make on the underwriting model can really impact the IRR in maybe an artificial way. So it's important to look at what really is important here. So going past IRR, which can be manipulated by these different factors, is okay, what's the risk on this deal? Is it a high risk or low risk? What's going to take to get these returns? Whereas development deal, a lot more risk involved. Development, building up, leasing up, stabilizing it, selling it, right? Other than the spectrum, more of a core plus deal, already stabilized, few years old, basically new, no renovation component to it at all, lower risk, right? So what's your risk involved and what's your comfort level with that? is there an underlying fundamental here that makes sense as far as that basis play?
Yeah.
We're getting a very discount on the property when you're acquiring it relative to what it costs to replace it or what maybe other comps traded for in the past. Is there a play here to where it's neighboring another site you already own, the person already owns, to where it's greater for scale? So there's more. Also, back to the cash flow versus appreciation piece. What percentage of return comes from cash flow versus appreciation? Is the IRR all based on appreciation and some sale in 2-3 years, or is half it from cash flow? So that would go back into the risk component as well.
Yeah, I think that like IRR is something that like everybody looks at, and not a lot of people understand or realize how much weight or not unweight they should put on that. This is a great a future episode where we can do a whole episode on that.
I'll give you one example real quick.
Yeah.
We did a underwrite on a previous deal just like last 12 months here, but the IRR moved by 0.5% by shifting the hold period back by 6 months. Is that big of an impact?
Yeah, I mean, 0.5% is like, it might, to people that are just that might seem like, oh, that's minimal, but like when you're talking dollars and cents, it's a lot. It's a lot. What are some warning signs that people should look out for or recognize in an operator when evaluating operators that they may invest with? I think one that you had brought up earlier is, maybe not a warning sign, but kind of like an indicator is if they've never invested in their own deals or they haven't done a deal of their own. They're always doing deals with other people's money, which doesn't have to be a bad thing, but also, the risk tolerance there. How hard are they willing to work for that thing? But what is something that's like, maybe this is not the best operator for me?
That would be the first thing for me would be, okay, how much of their own money they put in this deal? If they're putting nothing at all, then my question is like, well, how much do you believe in this deal, this business plan? Every deal I've done, I put money in myself, and usually one of the bigger investors or the biggest investor. Like, you have to do that. It just shows alignment with your LPs.
Yeah.
And it shows that you believe in. I'm alongside using LP in this business plan, ride or die. We're going together. Like, I have a lot of stakes just like you do.
Yeah.
Right.
I think they also go back to what you were talking about risk and underwriting is like alignment often shows up in how conservative or aggressive your underwriting is, because you can be a lot more aggressive if your own capital isn't in there.
Yeah.
So I think one of the other questions that I wanted to know is how much weight should somebody put on past results or past performance of an operator for future projects?
I think there's some weight there. And maybe you're referring to quantity of projects versus the quality of those returns.
Or either or, yeah.
Well, they're two different things. Yeah. So quantity, I think, has less of a weight, because if you look at, there could be a great operator today who has a lot of money every deal, has a lot of stake that this to go right, and he could have a great team, and he could do well, very, very well, right? You could have somebody else who has no money in his deals and has had no record at all. That'd be very, very risky, in my opinion.
Yeah.
Right. Other side of the coin would be, okay, what's the quality of their track record? Meaning, okay, they've had 5 exited deals. Maybe they have been subpar results. Maybe they operated in the hardest time ever in real estate in the last 15 years. Okay. But maybe they still got a win that was better than the S&P 500, for example. So I would look, I wouldn't place weight in the track record as the most important factor. I think you're looking like, what's your experience been? What's the lessons you've learned? What have you done the reps?
Yeah.
Have you gotten the reps in?
Yeah. So big question. How do we think about our role as operators, and how do we want to be perceived when people are evaluating us? So I'll start with you first. You founded the company, and before I came on, you did IR. And so, how do you think about your role as an operator, and how do you hope that you're perceived, and what do you do to make sure that that is the perception and the factual execution of your role?
Yeah, what I believe the perception of Focus Capital is that we communicate well, we operate well with integrity, operational excellence, and we will do the best we can with the properties.
Yeah.
And the investors trust long term.
Yeah, building on that, I think as the head of IR here, one of the biggest indications of success is, did we fully raise? And I think that one of the biggest things about this most recent raise of Gateway Crossing is we were technically oversubscribed. We had people on the wait list for that deal that we had to turn away. And
first time ever.
Yeah, first time ever. But the first of many is what we want to get to, and that is a testament to not just the efforts that we have, but also the trust that we've built with our current investor base and any net new investors.
Yep.
So to wrap this up, if you're investing passively, I think it's safe to say to spend as much time on evaluating the sponsor as you do evaluating the deal,
Yes.
if not more,
Yes.
because it's one of the most important decisions you'll ever make.
Yeah. It's funny because I get some questions from people sometimes. I know they use probably ChatGPT, and they give me 30 questions about the deal itself and underwriting and these assumptions and market. And I'm like, you forgot the biggest question of all. Like, ask about me, how we operate, what's our experience been? Like, that's the most important part personally.
Yeah, I mean, and I haven't been at Focus Capital long, but I've been, doing this in this space for a while, and it's funny how many like 30 to 45-minute conversations I have with potential investors where it's not until the last 5 minutes that they're like, are there any questions that I should have asked or anything that and we realize
The most
that
obvious one of all.
first you didn't ask, what makes insert company, so Focus Capital. You also didn't ask about me and my role. Like, you just asked me questions about this deal, about this other things, and then, like you said, you can tell when somebody has used, ChatGPT or Google, what are the top 20 questions to ask me,
Yeah.
or even people that just jump right into it just purely off of the deal. And there is some indicator if they've done a lot of research on this, if they've read through our website, that maybe they already have an assumption of what we're doing, and that's great that they already trust us to hop on a call with us. But one of the biggest questions that I think that people overlook but shouldn't is, what makes you different, all other things being the same if you had the same deal, and then what makes you different, so Focus Capital and then Chad, or Focus Capital and then Jared, and then what is your background and why should I trust you, basically. Because if they stumble on
Great
why should I
questions.
trust, like, just straight up ask, why should I trust you? Why should I trust you with my money? Like, this deal sounds great, I get the numbers, but why should I trust you? And if they stumble on that, then I think that would be a warning sign.
Yeah, I agree.
Well,
Great questions. That's a
anything
wrap.
else for this one? All right, perfect. Thank you so much for your time. Thanks for listening to this week's episode of Focus Fridays. We release a new episode every week, so be sure to join us next Friday and beyond. If you'd like to see our next investment opportunity before it goes public, you can join our investor list by filling out the form on our website, focusedcapital.com. If you have any inquiries about what we've covered on our podcast, general real estate investing questions, or suggestions for the show, we'd love to hear from you. Feel free to reach out to us anytime by emailing us at investors@focusedcapital.com. Take care, and we'll see you next week.